So Ethereum successfully merges to proof of stake. Over that event that makes it clear for us, for investors, for traders, Ethereum has merged. But isn't it the beginning of problems that may bring over due to some structural issues that may happen on that time being? So today in Blockrevision we'll discuss over the possibilities of some elements that may seem as a step backward rather than forward for Ethereum in terms of the merge that recently happened. So welcome to Blockrevision today at 10 a.m. each time, 9 a.m. Each time. Let's get into beginning. So we are starting over with let's get turn on the right. So we are right over with economy view and starting over with Fed's move anticipation that may bring some of the important economic revelation next week. So economy of US recently shown the resilience in the face of even that fast inflation and even interest rate hikes of that pace hasn't spoken. It means there is still much of a place, much of a room for Fed to hike it even further. Unemployment was low, also manufacturing is good, and that makes, not mentioning jobs. Sorry, my Bixby has switched on. I need to switch it off. So, not mentioning jobs that still are showing some resilience as well. It brings us to the clear thoughts that Federal Reserve may stamp even harder on demand and hike it next week further. So, regarding this macro headwinds from ever aggressive central banks, how the elements may long be persisting, those macro elements may be persisting in a correct and healthy manner. Those earnings that may find it difficult to adjust and withstand those difficulties, those headwinds that have been mentioned. That's the things that we investors bother the most. Among others, there are some expectations of a plunge, some prognosis made recently by Mr. Dalio that said that those interest rate hikes may bring private sector credit growth down, which may bring even the whole private sector spending less, and hence the economy may get down with it. So whether we might agree or not, that definitely interest rate hike may influence how the demand structure will look among the economy, and that may eventually lower down the demand by the end. So this demand pressure, this pressure to lower this down may bring also valuations lower. Needless to say, Dalio, however, had a kind of a poor investing track record that hasn't been outstanding, but his his statistics regarding the US economy back in the 2010s has came into fruition many times. That's why we cannot neglect this stance. In terms of EU, we are still on the way, possibly, to go through recession. Recently, Mrs. Ursula von der Leyen has found it very important to lower lower the gas consumption by 5% among these problems with supply of gas and oil. So that's the price we are paying, that Europe is paying for an energetic dependence from Russia. Ursula von der Leyen have called for radical steps to stem energy crisis, right now edging closer to rationing measures and calling for a swoop on energy companies' profits. So that might be a major step toward curbing the energy deficit. This reduction might be a very important step toward curbing the energy deficit the continent has been facing. Because, as a reminder, Gazprom reduced the gas flow through its pipelines, shutting down Nord Stream 1 for an indefinite amount of time. So that's one of the problem. Headwinds are being seen globally, and that's also something that is yet to be seen if the Fed language will be that such restrictive stance of policy, something that may be warranted for some time. So headwinds are being seen globally, and right now Fitch trims global GDP forecast as inflation and rate hikes take a toll, and that's why expectations are that US growth will lower from 1.7 to 0.5% in 2023. So it's kind of a very very strict lower tendency being observed. So we'll have a look at what the restrictivity of policy Fed might be. So recently we have suffered from freight rail strike, and that's something that may also bring some problems for commodity supply. Pricing pressures recently have peaked due to commodity disinflation, but America's manufacturing workers have endured the effects of rapidly rising material costs and severe supply chain disruptions due to this rail strike already. That's why we may see a possible reversal on those valuations where those downward trend already been observed. Right here we may see that GSCI may get back upwards. So we can find that with this one, that's something that may spook many of us, as not only this supply chains disruptions has suffered recently due to COVID consequences or this war consequences, but also this freight rail strike that also brings more negativity to the market. In terms of market outlook, I would like to, as a kind of a introduction, say that recent sell-offs are kind of a reminder that a sustained rally is likely to require clear evidence that inflation is on a downward trend. So without this, we may see such of a price action that may lead even to lowering a tendency to 14x earnings per share scenario, where forward PE may get back to 14x, and with this one we may observe up to 12% of a sell off. So in terms of crypto outlook, that's what something as market has lived with, and that's Ethereum MERGE that is officially out. So definitely the second biggest cryptocurrency just got greener, but that also some of the problems that entails. Among them are the bugs in the code, and other network vulnerabilities could remain undiscovered until the rollout. That's why from now on some of the problems, some of the bugs, malwares or something may turn up, and we may get ready for this. Also, about 33.5 billion worth of Ether is currently deposited in 554 decentralized finance applications alone. So we may see kind of a breakdown of many of those DeFi structures if have some problems, structural problems, and also many of crypto startups are building on Ethereum. That's over 500 crypto decentralized applications without Ethereum, with kind of a very strict problems that may appear in the days to come, that may also bring over some difficulties for the rest of the cryptoverse. So also very important that I would like to put an emphasis on point is dependence from other entities devoting network security. So centralization and security might become an Achilles heel from now on. Around 70% of stakeholders will be United States companies that are under US regulations of that specific country. This Ethereum's dependence may be threatening by presence, cause electricity by now has been kinda guard of a network. Right now, however, on proof of stake mechanism consensus, every market whale would be able to join the Ethereum market, buy the tokens, and modify consensus mechanism rules very instantly, I would say. With electricity, that would be necessary to bring over to those minor equipment that wouldn't be so abrupt. That's why we do find that this centralization and switching to proof of stake mechanism consensus might be kind of an Achilles heel if that won't be, if the chain won't become even bigger to make it unavailable to possess more than 50% of a hash power. However, by now the chain still might be bought by someone else, by botting up that many tokens of a market that will align with 50% of the total. So that was it from Crypto Outlook. Let's now have a look at market mover section. And in terms of this one, we had yesterday balance of trade from Japan, and it has been shown to be lower. So we can find that that's the problem that Japan need to get out of. Right now there is huge deficit that surged to the levels been recently seen around 2013. In terms of Australia unemployment rate, showing that it has reverted this time, but this reversal is nothing that may spook the market by any means. So the jobs market is still stable. In terms of US data, retail sales already been introduced and it's over negativity. That's why on a longer time horizon we are still nowhere here indicating a recession. And in terms of the upcoming data, there is industrial production and industrial production from China, and right over retail sales and Michigan consumer sentiment tomorrow. Consecutively from Great Britain and US. So right now let's jump to Ethereum to USDT chart. I will show you out that recently the market has been really betting on problems, or rather lower results from lower market results from this merge to appear, and that would happen eventually. Right now we have Ethereum USDT that is suffering from overtaking this 1800s level. Right now we are trying to get through with this structure to push it forward, but right now there is a bigger likelihood of Ethereum to drop to levels of 1000 and level up this bottom that had been marked back in June and July, rather than get it through recent highs, especially with this very strong impulse that may indicate a wheel of a further sell-off that may turn up. So in terms of Ethereum, I would rather expect the price to react reversely back to those levels of 1720s, and right over have another drive downward. So for this one, if I'd like to use a brush, there will be kind of that price action with a possible first stop right around this drop. So we may get have a little bounce from here, and right over having another move downwards back to 1370s. This dip is not of a high significance. That's why I've marked that the trajectory will be as this brush indicates. So another stop for Ethereum after this rebound due to trend line being met is 1350ish, and right from here there is about 20% of a drop. So if in terms of a trading idea, I would risk kind of a price behavior to happen with a very nice risk reward ratio at 3.05. So 3.05 is the one that is satisfactory, and the price when this hit 1707 around, I would try my bet to start a put position from there. So for me, Ethereum is right now a sell on a news event. That's why right after this merge turn up, even that there won't be any of particular bugs as of right now, or even in the short term, nothing won't threat the position of being second cryptocurrency on the market by capitalization. I do expect that is much of a sell-off yet to happen. So that's my opinion. Attach your opinion in comments. Thank you very much for watching, and see you tomorrow at 8:45 East time.